Good evening. I don't know if it's a good evening, but good evening. That's all I can say. It is Wednesday, and we are at the 18th of December, 2024. And what an event that happened today. What basically took place is what the market was expecting. The market was looking for a hawkish 25 basis point cut. Bingo, got that. The market was looking for the Fed to say they're including this cut, there'd be 3 or 4. Bingo, you got that. If you looked at the dot plot that came out, it shows that including today, many members still think 2 more cuts. Others think 1 more, but the majority looks like think 2 more cuts for 2025. So what went wrong that the market cratered? And I do mean cratered. While you're looking here at the QQQ down 20 points, that's big. Dow down another 11. Are you aware that you're now 10 days in a row down in the Dow? This is the longest break, of direct break, just day after day down. I don't even think you made another high today over the prior high on the DIA here. And what does that mean? 10 days in a row since 1974 now. SPY down 18 points. I wouldn't have thought that was going to happen today, and down 5 points in the RSP. So what went wrong? Well, in a nutshell, what went wrong is that the Fed flip-flopped again. Remember before they were fighting inflation. Then they were worried about the labor market. Now they have flip-flopped and said now it's inflation that they're back to, and they have to be careful. They don't want to disturb the labor market, but everything's in a good place. The market didn't buy that, and this is also part of it, the market was so overextended without more bull news, we pulled the plug, and this was the opportunity for the market to cash in. If you were to ask me what I think at the end of the day, I'm going with the second part of it. It's the cash in. Market was looking for an excuse, it got it, and boom, all of a sudden everything came unglued. So, is this the end of the bull move? Well, it certainly is a trading top. Is this the end of the Santa rally? Absolutely not. Why? Well, the traditional one starts Christmas Day, ends January 2nd. Ideally, you're coming off a big break now. That's the ideal part. Makes it a little easier to get it. The non-traditional one starts on December 17th yesterday, but goes until December 12th. So you've got plenty of time for this market to absorb whatever it has to absorb, another jobs report and so on, before we get to January 12th. Do you agree with that? I hope that you do. So I looked at the market today, and it's interesting because if you looked at the lost embedded readings that we have had over the days, and I've been showing that to my customers here, we've been tracking them now for all of December. I'm shocked how many today even gave you the objectives. I was blown away. I didn't expect it. I thought you'd lose on a bunch today, and it didn't happen. So where are we? We're in a rebuild phase. Now, with that rebuild phase, you got to look that tomorrow you're going to get jobless claims. Tonight, you're going to get the reaction to the U.S. Remember how this works. You get the yin-yang. We react. We get whatever we're going to do. We get a crash. I'll call it a mini pullback crash, whatever you want to call it today. It was a huge move. Asia looks at it. They will react and do what they do. Europe will get it. And by the time it comes back to us, because we've been down in this much, especially in the Dow, I question how much more down there is left in it. That doesn't mean you're a bottom picker, but I do think you bring out your list of shopping things that you might want to own going into 2025 and things you don't want to own anymore. And traders are going to use this to make those swaps. You're going to get the third quarter final GDP. The word is final, so it's not the prelim, and we'll see what the revision is, if any. We're going to get the Fed Regional Business Activity Index. That'll be updated at 7:30. The National Association of Realtors report existing home sales for November at 9. Did you see Lennar's earnings? stock was down like 12%. Toll Brothers getting smashed. XHB, the Builders ETF, getting all smashed. You know, you're back up to 713 in fixed mortgages. 713, that's a pretty darn high number, right? The Conference Board's going to release their monthly leading, coincident, and lagging indicators at 9. The Bank of England's going to tell us what they're going to do. They got a break today. As the dollar soared, currencies were getting smashed. I mean, smashed. Nothing withstood this Fed meeting. It went terrible. I was surprised that nobody asked the Fed chair while it was going on, "Sir, are you aware that the stock indices are collapsing as this is going on?" Nobody had the guts to do it. Now, another event happened that doesn't help, or it does help. I don't know which way to look at it. We were supposed to see tonight that Congress was going to vote on the budget deal, giving themselves a raise, all kinds of pork in there, and they were going home for their holiday. That part's over. Trump and Musk, not Vance, Trump and Musk came out and said no. They don't want that deal. It's too full of pork. And Musk said, anyone that votes for it, be careful. In 2 years, you're going to pay the price. I don't know what that means, but it's a threat of some type. So now Mr. Johnson, the Speaker of the House, has to go back and redo this whole thing. We could see this weekend the shutdown, because at some point you're going to have to convince Democrats to do it. I am of the opinion that since 2009, lawmakers have not gotten a raise. Now, there's two schools of thought. Number one, they're doing a service for all of us. If they don't want to do it, forget it. Should do it for gratis, as Trump does for the presidency, or you give them a minor increase. I mean, it has been 15 years. Would you stay in your job if you weren't making more money after 15 years? I doubt it. So I get that, but it's all the other pork. And it's full of pork, and that's how this works. You buy votes to get deals done. That's what it is. And Musk is stepping in, and this is part of what he's doing. He's saying, no, you don't. Those days are over. And guess who's backing him up? I wonder if the real president and VP is Musk and Trump at times. You know, that's not putting down J.D. Vance in any manner, but they're getting all the publicity on it. And Vance is doing right. A VP steps back. He's the backup guy. You don't want him to be your lead guy, so this makes sense to me. All right, so why don't we go to the charts and see what's going on, because there's just so much. First, I want you to look at this board. It is so important. You rarely see this. Uber in the green. What else? You see anything else? That's it. So when a market can withstand that, that's pretty good action when everything around it is just in a state of collapse. And that's what you got. If you were worried, hey, I wanted to buy Rivian on a break, you're getting it. If you were worried about uranium, well, it's down now under $28. AMC, back to the $4 level. ARC, I thought that should pull back, you're getting it. And here you are. Here's the break in ARC. You've had this beautiful run up. Now it's correction time. How far? That's anybody's guess, but you've begun it. You stepped out of the uptrend. You now have a higher high and a lower low. Where did the market go to? It stopped literally right by the 18-day average of closes. That's what I would expect you get a market to try to do. Will it leak more? If it does, the next objective could be the 104.60 level. If it's going to battle to stay good, it should battle right here, but it's not in a trend anymore, as I define a trend, which would be in an uptrend, higher lows, higher highs. You don't have it. And for the moment, you have downside bias. In addition, you lost the embedded reading. If you take a look, you had that reading embedded up until this isn't going to let me do it. I understand what I did wrong. But it's not going to allow you to do that. Oracle, we were just talking the next support zone in the market. Said to you two things this week. This market failed on this day right here at that bounce. It should have gone, I felt, as a chartist, to fill the gap. And when it didn't and it came back, you started by this day right in through here. You had 3-4 days in a row already of leaning on this band. When that happens, we get that gorilla glue trade. The market sticks to it. You do see that. And when it does it looks for major support. It also looks to see, can it get the market to develop an embedded reading. The fact that it's down so much, even if it gets it, I don't think you're going to get a lot of new selling. Look for the support at 164.56 to develop. CrowdStrike. When the market came back up, I said, even though it got away, I wouldn't chase it. That's what we've been talking about here. Why? Not because I know anything. Believe me, that's not it, that I know the inner workings. But when you're over the upper Bollinger Band, the odds of staying over it or under it are 5% of the time. So I felt that the market could come back, and I thought that we might be able to get the market back to the 18-day average of closes. Lo and behold, you went through that today, which means you went through it by a number. You might be able to get back down here. The important thing is, I think we're going to get an opportunity. Now let's see where that opportunity shows up. Rivian. Notice how it pulled right back to the 18-day average and stopped. So what's the theme you're seeing right now? The theme I'm trying to drive home to you is when you lose momentum, when a trend comes down, the first stopping spot on markets are often the 18-day average. That's what K-Web did. And if it continues down, you're always looking to see, is there another moving average or a Bollinger Band? You're also looking, are you overbought or oversold? So you've come down, and that's where you're at this point. Toll Brothers, riding. This is that gorilla glue trade. And you've developed the bearish embedded reading. You've also gotten under, with today's action, conclusively the 200-day average of closes. Now, that first move, whether it's conclusive like today or not, it's often an area that the big boys will look and say, this market's getting overdone. You're back down to something important. But this stock has just lost roughly $40 a share. That's a heck of a lot on a stock that was just up here recently in the 170 area, down to the 125 area now. So you don't think this stuff can't happen? Wrong. You don't think you should pay attention when you get lower highs, lower lows? You did fight your battle at the 18-day average, and it caved. And then it tried to hold. It couldn't do that. And then it became with the gorilla glue trade, which is, it shows no mercy when it develops. Same thing here. Yes, XHB is under the Bollinger Band and developed the bearish reading, but again, I'll let somebody else want to own it down there. Sometimes you get so far down that panic happens. Let that panic do its thing. I don't see an opportunity. XLF, oversold, under the Bollinger Band, breaking out of this sideways action. One more day like this, and then you've got to look at this and say to financial services, have a trade top in place. I was hearing today traders going, the banks still look good. I don't know that that's the case when you look at that chart. The industrial sector fell apart. What market hasn't? I want to stop here for a second. How often have I been telling you day in and day out, none of these charts are looking that good? I've been telling my subscribers that for a while in the stock market, and I looked at the end of the day today as to positions that they've come out of, and they're primarily into like 3 or 4 positions that they're doing fine on, but we had a lot more, and the charts have been turning bearish, not bullish in this market, and that's where you're at. You're going to have to ask yourself, did we make highs? I know you're going to argue with that, and the answer is probably not for next year. I think you take today, this current highs you made in the indices per se, and you've got to look. But what I do think you're going to be looking at more than not is probably a stock pickers market rather than an index market per se for the main indexes. That doesn't mean you can't go to the sub-indices. But this has been terrible. The industrial sector has been a disaster. We saw the Empire State number this past week go from a 31 reading last month to 0.02. Boom. Energy. I'm going to keep saying it. I realize President Trump's going to say drill, 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 but this is all about those drillers, the refineries. Does this look like they're doing well? I don't know. I see an embedded reading. I see a bearish picture. You're oversold under the Bollinger Band in terms of that, but you still have locked in the trend. And again, here's a market that went down. What has it gone now? It's certainly over a 10% break in it. In the gold market, gold has gotten hurt on this. Why? Pretty simple. U.S. dollar near 108. Interest rates 4.5 on the 10-year. That's a big headwind. Well, if gold gets hit, you probably should see Bitcoin get hit. Well, if you look at Bitcoin, it just fell 8%. It was 108,000 down to 100,000. And this is a market, if you really look at it and you match the percentages, you're not far away. They've all come down in similar amounts. Silver crashed. Do I think today did it? No, not at all. I've said China to you until my tongue got tied. China, 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 China. And that's what's causing this, including the wipeout in the copper market. All right, so you add the U.S. pressure to China doing nothing to revive its economy, and their economy is this. It's in a spiral to the downside, a true spiral. And you got to watch those things. I'm not trying to panic you, it's just the way that it is. In the bond market, as you go down, interest rates are going up. Are we getting to an extreme? We are. Are we getting overdone? Probably. Could we still go to 5% in the 10-year? Yeah. You're at 4 or 5, but it's not going to just go there. It would have to do an awful lot, and it will get the Fed's attention. In UUP, higher lows, higher highs. By the way, when I say it gets the Fed's attention, there isn't an awful lot they can do to stop rates from going higher. If they're worried about inflation, they might be happy about that because high rates are the enemy of inflation. So we will see what happens, all right? Also, people won't want to make a lot of goods if prices keep falling. So there's a lot going on here right now. FXE, well, I think Europe is just looking at what they were hoping for. The break here without them having to cut interest rates dramatically. And that seems to be what's going on. So you put it together, and it's one heck of an interesting time. I wrote tonight, by the way, probably one of the longer newsletters that I write for an evening session. I normally write a bigger one in the morning, but I wrote a bigger one for now. I was going to do a special report after the market, and very frankly, I was shell-shocked. I'm just going, what would I do a report on now? And I want to think it through tonight. I might wait until Friday to do this report. But my reports look like that. They're bullets, few paragraphs, a few comments, and I point you in directions. And I back it up with graphics and so on. I love what we do in the morning when you join me and we get to look at charts and get to work our way through. We cover all this in what I'm doing. There's something for everybody. The ETF guy, because we're going to deal in all the futures markets that make that up. We're going to deal in the interest rates, the currencies that you trade, everything that affects everything. You also get our mobile application. It's included in all this. So why not give yourself a try? Take a look. You'll see the special reports. You know they're all video reports that I do. Go to iraepstein.com research. Take a look at what I've got there and join me. I think you'll find it worth looking at. Try it for a month. See if it makes sense to you. I think you'll like what you see. I'm Ira. Have yourself a great evening.